The last section that I'll go into would be useful pointers when investing in SPACs. So one of the things to take note of is that we should invest based on public information, because one characteristic of SPACs is that they can be highly speculative and sensitive to rumors about potential acquisitions. So this really comes through from the fact that it is a blank check company prior to the announcement of the acquisition, and there can be various news that may come out from time to time about what are the companies that this SPAC is looking to acquire. In this case, we have used an example of a US SPAC, Churchill Capital 4, where it was speculated by investors to be buying an EV company, Lucid Motors. So what we see is that the share price moved around because of all of this different market speculation. And after they confirmed the SPAC deal, the share price actually fell by 25%. So these are the market volatility that one should be mindful of, which is why we should always invest just on public information. The other important thing to take note of is do not have the fear of missing out, because SPACs can be highly volatile. And what we need to remember is that there's always another investment opportunity. So in this case, I've used another example in the US, which is DWAC, a SPAC that is linked to Donald Trump. Again, there's a lot of volatility in the share price. Because of various speculation, there was a very significant gain of up to 800%. But then because of various reasons, the stock also fell by 10% after the very big gains that were seen earlier. So one thing that we should always bear in mind is the risk reward when investing in SPACs. And this is the last point that I want to make, and something that we should always bear in mind. So when making any investment, we should always think about the risk reward. And the point to take note of here is that the higher your entry point, the less attractive your risk reward would then become. So I have two examples here. The one on the left would be if your entry price is at 480. Remember, because of the redemption feature, you do have some protection that is given to you as an investor. So if you are just looking at being able to redeem at the NAV, that might represent a potential upside of about 4%. In the event that an acquisition actually happened and you have a target price of $7 upon the completion of this business combination, then very good, there is actually an upside of 46% in this case. It was your risk reward from buying the SPAC at an entry price of 480 is actually very attractive. If on the other hand, the SPAC is already trading at say $6.50, and if your target price is still likewise $7, what this means is that you're looking at just potentially 8% upside even if the acquisition is completed. But on the other hand, if for some reason or another, the acquisition does not come through, the SPAC gets liquidated, or you're looking to just redeem at $5, then you're looking at potentially 23% downside, which is very significant. So with that, I've come to the end of my presentation. If you want additional resources, feel free to visit the SGX Research and Education website. We also have quite a number of write-ups on SPACs on our website. There's a Ask Me Anything section on our website as well that you can be posing your questions. So feel free to interact with us through these different platforms. To summarize from our session earlier, what SPACs effectively offer investors would be the opportunity to invest in high growth companies through a public listed company. We discussed the different protection mechanism. So this will be things like having your cash being kept in the escrow account, it'll be the redemption feature, it'll be your voting rights. We went through the various risks. The one that we constantly highlighted is the dilution risk. But on top of that, there are other risks such as the lack of operating track record, the sponsor risk, as well as the liquidation risk. In terms of things to bear in mind when investing in SPACs, we should find an investment strategy that is best suited for our investment objectives, risk appetite, and time horizon. And most importantly, always think about your potential risk reward and do not buy on speculation. Okay, so with that, I will finish up the presentation. Have a very pleasant evening. Thank you so much.